When you're in your 20s or your 30s, you don't want to think about like your 60-year-old self. Nobody's thinking 30 years ahead. However, the decision you make today, your future self will thank you. I promise. That's what I tell myself.
Gloria Steinem once said, "We will never solve the feminization of power until we solve the masculinity of wealth." Barbara Provost and Maggie Nielsen are the team at Purse Strings that will help you navigate the ins and outs of financial independence so that you can be financially fearless. This is Women in Money, the shit we don't talk about.
Carolyn, we are thrilled to have you on the show today. And so before we dive in, can you introduce yourself to the listeners, a little bit about who you are and what you do?
Yeah. Well, thank you so much for having me. So, Carolyn Rowland, I am based out of Brookfield, Wisconsin, which is right outside the Milwaukee area. I am a certified financial planner and an enrolled agent. So, I basically marry financial planning and tax preparation strategies. I am now a partner in Resilient Wealth Planning. I am technically the founding partner of Resilient Wealth Planning, but my business partner, Kim, and her husband, who's also a partner, they live out in California. And we merged earlier this year. So we are a wealth management firm, right? So we're offering financial planning, investment management, and tax preparation services. But my sweet spot has always been retirement planning and tax planning. I got my start in the industry 2013, 2014. I actually started working in my dad's firm, helping him with taxes. So he was a financial advisor, tax preparer, needed the help. So he trained me on taxes, and I joke that I grew up in this industry, but I love taxes. I love tax law. I love how taxes relate to financial planning and your financial strategy, and they are so connected. So that's really where I am today, and I primarily serve women in corporate roles, female business owners. Yeah, because there's tax strategy on both sides. There's financial planning on both sides. So that's me. Oh, I'm married. I have two young girls. I like to think that I'm raising two fiercely independent women for our future, right? And yeah, I think so. My 3-year-old is definitely showing it.
Already.
Yeah, so that's me.
I've never heard anyone say that they love taxes. And I'm sure all our listeners, I'm trying to channel our listeners and be like, listen to this podcast because yes, it's about taxes, but it's still going to be exciting. We're still going to have fun. And yeah, there's all this strategy that goes with it, which I always feel like always as just like a normal person, not like a business owner, you just file your taxes and you're like, this is the bad tax day. But Carolyn loves taxes. We're going to make this fun. Apparently there's strategy and we're going to get into that.
There is. And that's why I love it. That is why I love it, because there is strategy to it. And it doesn't have to be a daunting thing, but we'll get into it.
Well, I love that you love it.
Yeah. And we're going to start with your story of what kind of drew you to helping women take control of their finances. I know you kind of worked with your dad and got a good taste of the financial life, but what drew you to then working with women?
Yeah. I mean, kind of taking a step back, I really liked this field because I saw the relationship aspect of what my dad was doing. And I was like, ooh, I love that. And then kind of as I started to gain more experience, figure out who my kind of ideal client was, I really love the emotional and behavioral aspect of women. And I think we kind of naturally attract our own self, I guess, in the type of clients that we want to serve. So I'm a small business owner, so I naturally wanted to work with small business owners, but there's just something about that relationship, helping women. I really love empowering women to take control of their finances. So really just marrying that empowerment with the emotional and behavioral aspect of money, it just kind of become a natural progression.
Wow, that's wonderful. So for the most part, women in business, do you also do couples, single women?
A lot of single women. Yeah, I mean, I'm not going to sit here and be like, no, if you're married, don't come work with me. I work with a handful of single, divorced, widowed women, just because I find that women love, they know when to outsource and when to ask for help. And I think we love having partners in all aspects of our life. And so, yeah, handful of single, divorced, widowed women, a lot of my accumulation clients. I've got a handful of single working women. Yeah, it's a broad range.
Yeah, good. And do you do taxes individually, or do you only do taxes for those people that you do financial planning for?
Oh, that's a really great question, and a question I get a lot too, because people are always looking to like refer out tax prep. But I try and focus primarily on tax preparation services for our financial planning or investment management clients. I will take on the occasional like tax only, I call it, like if they don't utilize our only services, if I feel like they're a good long-term fit, because especially with like business tax returns or business clients, like there is a lot of ongoing planning that we do throughout the year. And like that's what I really want to help people do is like, again, have that relationship and with planning and all that. Like we're not a transactional firm when it comes to taxes. So that's why we really like to primarily offer it for our existing like advisory clients.
Got it. Cool.
Yeah.
And so let's dig into it. What's the difference between pre-tax or Roth retirement? And how do you know which is the right move for you?
That is the golden question. How do you know if it's right for you, right? And
Right.
it really depends. But really great question because it's a common one and it can be complex. Taxes are complex. I think retirement planning is complex. But pre-tax means you're making a contribution into a type of account and get a reduction in your income today, right? So you're getting that deduction from income now, but down the line, when you take that money out of your retirement account, you're going to pay income tax on it. So all that money is going to grow, but every dollar you pull out is going to be subject to income tax. Now, on the flip side, a Roth contribution is you're essentially paying the tax liability up front. So now, but then all those contributions and the growth are tax-free down the line, assuming you're making like checking all the boxes and making the right kind of distribution, right? Like no early distribution, things like that. So it's just a difference in when you pay taxes now versus later. And you said like, okay, how do you know if it's the right move for you? And it really depends. It depends on what your current income is, your current tax situation, like what are your future goals, right? So I think when a lot of people think about taxes, they think about, oh, I need to save money on taxes now. But we really want to make sure that's aligning with your long-term financial goals because there might be someone who loathes paying taxes in retirement. And I've seen it enough too, where my clients will hit that required minimum distribution age and they have to pay a lot in taxes and they don't necessarily need the money. Like everybody's situation is different. But if you can control that narrative now, that's where like a Roth IRA is great. Specific examples are like, okay, it makes sense to contribute to a Roth if you're maybe just starting out in your earning years, you're in a lower tax bracket because you're going to pay the income tax on your income at like say 10 or 12%. And then maybe down the line when you need to take those funds out, you're in the 22% tax bracket, right? So from a number standpoint, like that is where it makes sense. But at the end of the day, I really do like a blend of both. I think there's something to be said about having diversification among like the type of accounts you have. So that's not just pre-tax, which I think a lot of people will just kind of automatically do through their employer's 401k. But again, having that Roth bucket, maybe even a taxable bucket. So long-winded answer for you.
Learning about like taxes and thinking about how you have to think about it over like many years was one of the wildest things I've learned like doing all of purse strings is because I never thought about like, well, what about my taxes in 30 years? Like, I don't think most people think about that. And so it's always just like, how do I pay the least amount today? Which I get that. We're all trying to do that. But I've never realized that you really have to zoom out and look at it as like, a 30 to 50 year picture of like when you're in retirement or all these other moving pieces that you have going on, which I don't know. I was still just like, wait, you have to really zoom out. This is not just like a year to year, like pay a percentage. It was a real learning curve for me.
Oh, yeah. And then when you're in your 20s or your 30s, you don't want to think about like your 60-year-old self, right? Like nobody's thinking 30 years ahead. However, it's like the decision you make today is going to impact future you. So, yeah. Your future self will thank you. I promise. That's what I tell myself.
And so are there like common mistakes you see women make with retirement accounts that we could fix before year end?
Mm-hmm. Yeah. And they don't have to be big. Like it can be simple things like if you are employed, your employer offers an employer-sponsored plan, like making sure that if there's a match, you're contributing enough to qualify for that, right? Because that is free money. And we don't like leaving free money on the table. And then it's also contributing consistently. I think where I've seen a lot of success is those that are contributing consistently, like per paycheck, monthly, that automatic investing, it doesn't have to be a lot, but it really compounds over time. And that's something that you can easily fix now before year end. And then another thing too, like, speaking to my business owners, is making sure that if you are self-employed, you want to make sure that you are also eligible to have a retirement plan in place. So some types of retirement plans need to be put in place before year end. So just kind of having that awareness, and maybe it's a SEP IRA or a solo 401k, like those have to be established before December 31st, but you have until your tax deadline to fund them. So again, it's kind of like being mindful, being planful. And then my last little one too is like, okay, in the last quarter of the year, a lot of people tend to get bonuses. So making sure that with that bonus, maybe throw a little bit more into retirement, or maybe you need to set aside a little bit for taxes.
Okay. So year-end tax planning sounds scary. Everyone hates it.
For who?
Yeah.
I love it.
I know. You're like drooling. You can't wait, right? No. So what quick wins can women tackle before the end of the year?
This is great because when we're talking about tax planning, things that can really positively impact you, especially with this year, whether you love it or hate it, the One Big Beautiful Bill Act is going to impact our taxes for 2025. So like everybody can benefit from making charitable contributions. You want to make sure that that's completed before December 31st, right? We want to make sure we're doing that in this tax year. I really want to make sure that if anybody has an FSA, that like you're using those tax dollars, because if you don't use it, you lose it. But then on the flip side too, like you still have time to max out these contributions, whether it's to your HSA, your traditional IRA, Roth IRA. And we kind of have a little bit of leeway. We say year end, but really it's kind of like, okay, tax year. We tend to have some buffer where it's like, okay, we have until April 15th. But I really like to make sure that we're being mindful of planning and like doing it now versus like April 15th, right? Because the time to plan and be proactive is now. So a couple other things I like to make sure people are doing also is reviewing their withholdings. So if you've traditionally owed, like let's look at your pay stub, let's do kind of a projection, and do you need to make any changes? Or did you get married this year? Because that's going to impact your taxes heading into 2026. So now is a really great time to review all of that and kind of make some tweaks before year end and then heading into the new year. And then one of my kind of like personal favorite things to do from like marrying the financial planning and the taxes is tax loss harvesting. So if you have non-retirement investment accounts, you may have the opportunity to harvest some losses in your portfolio, which will kind of offset your income up to about $3,000. But then also kind of helps you with, if you have some capital gains, it'll offset that income as well. So some a little more like nitty-gritty granular strategies there, but I think those are good. Like, okay, at least a few of those should resonate with your listeners.
So let's dive into a couple of those, because I think some of that is like foreign language. So like tax loss harvesting, like does a layman person do that? Do you need like a professional help you with that? How, all the details?
Okay, so professional can do it, should be doing it. Like that, to me, that's one of those things where if you're hiring a professional to manage your investments, to do your financial planning, like that's kind of just a year-end tax planning strategy that we would normally do, right? So that's something that for my clients, I'm looking for, right? Like you don't have to ask me that question. Like everything I do is through the lens of like tax planning, tax efficiency. So that's something that's like on my year-end checklist for working with clients. If you're managing your own investments, that's something that somebody can do on their own, no problem. It's okay, go into your brokerage account. And by brokerage, I mean like non-retirement investment account. Are there any losses? So what that means is your basis is higher than the value of your stock. So there's technically a loss in the portfolio. You can sell that, reinvest it. You got to be careful, like wash sale rules. I'm trying not to give financial advice here. Tread lightly. But you can kind of use those losses to benefit you from a tax standpoint, right? Like offset your income, offset gains if you want to kind of diversify out of a, highly concentrated position.
Okay. Is there a certain amount people should be like, is there like, oh, up to $600 you get like a benefit? Or I know there's usually like a price point, or because I know then when you do like itemized, does this go with the itemized at all? Or because some of us just do like the whole big write-off, like whatever they give you, the base. I don't know any of the lingo. I don't know.
You're doing a really great job.
I send it to my girl and I'm like, yo, can you? And she just sends me back what I owe. Or get money back?
So traditionally, to take a deduction, and I'm talking about the federal level, right? Like states, they're all different. Traditionally, to be able to take a deduction from your charitable contributions, you have to qualify to itemize. Now, the standard deduction is so high that a lot of people don't itemize anymore. But with this one big, beautiful bill, if you take the standard deduction, there's what's called a above the line deduction. So you don't have to itemize in order to get this charitable contribution deduction. So let's say it's like $600 is the number that's at the top of my mind right now. We actually saw this during COVID. Like they allowed that above the line deduction, I think of $600. Yeah. So couple hundred, but I know what you're talking about, Maggie. You're like, it's usually $500 and you kind of a freebie that like, okay, you don't necessarily have to substantiate it, but don't go above that, or you do have to substantiate it to the IRS.
And then the FSA, which is the flexible spending account. So that's for like your doctors and your medical bills, correct?
Yeah, co-pays. Mm-hmm.
Let's say like you're not going to the doctor. I think you can go on like Amazon and buy things from that account, right? So it's like buy some shampoo, buy some of your Tylenol, like
buy tampons. That's like I'm like buying women's healthcare. Target and Amazon, I'm noticing like you go and make a purchase and it shows you like, oh, this is FSA, HSA eligible. I'm like, absolutely. Yeah. Go stock up on Band-Aids. Like you said, Tylenol. Go to Costco.
Everyone's getting personal care items in their stocking because that's where all the money is in my account.
Band-Aids for everybody.
I love it.
Yo, everyone needs to refill their, living on my own, I always go to like my medicine cabinet and I'm always like, oh yeah, I got that. And I open it and like, it's not there. And oh yeah, I have that. And I open it and like, there's no Benadryl. I was like, oh yeah, I got to restock.
Because your mom's not filling it up anymore.
Yeah, exactly. So maybe that's my time to fill it up.
I do love the idea of that being a stocking stuffer.
It's what a girl needs sometimes,
You're
know?
Clever. It is.
Okay, so we have the charitable planning, we have the flexible savings account, we've got the tax loss harvesting, and I know you mentioned one more, I didn't write it down.
Reviewing withholdings.
Reviewing withholdings, and that's important too. And so, Carolyn, you had a baby this year.
I did.
And so, do you add like another person on your like withholdings?
Yeah. So I'm self-employed, so like my situation's just like wildly different, but it's something that you can definitely take in consideration. So I would say like the majority of people, whether if you're employed, you get a W-2, like that is something that you can account for on your withholdings. So claiming an additional dependent, because you should be eligible for the child tax credit. I say should like lightly, right? There's income thresholds. I mean, personally for me, like that is something that I took into account. Like my tax liability should be at least $2,000 less this year because I had a baby. And then my medical bills should hopefully be deductible, right? So you bet I've been thinking about that.
I bet.
Getting this baby out and saving some money.
My new tax deduction.
And so how can you align your tax strategy with your retirement goals to make a real difference for women's long-term confidence?
Yeah, I've been somewhat alluding to it already, right? Where we can see that tax planning, tax strategy really ties into retirement planning. But I think the biggest thing is making sure that taxes don't necessarily erode your retirement savings. Like we were talking about making pre-tax contributions to help save on taxes, but down the line when you have to pay the income tax on those distributions, like we don't want to lose gains in your income towards taxes. So it's kind of like, okay, that's where that 30-year planning or looking ahead comes into play, where it's like, how can I be as tax efficient as possible? That's not just like where you're putting your money, but also like the types of investments that you have. So it's really that. It's making sure that the tax strategy and the financial planning align so that we can maximize your wealth. And like, to me, I think maximizing wealth is probably one of the most empowering things. That's what drives me. And I think it's just really cool to see that number grow and to get that much closer to financial freedom.
For sure. Yeah. And on that, if listeners could do just like one or two things before the year end to boost their retirement, what would you tell them to prioritize?
Okay, it's got to be the ongoing contributions, because that is the biggest impact that over the long run, like if financial independence is what you want to achieve, like just start somewhere. Mm-hmm. So I would say like go to your retirement savings after this podcast, whether it's your 401k, increase it by 1%, or if you're contributing to a traditional IRA or a Roth IRA, set up that monthly contribution, even if it's just $25, $50. If you want to get to the maximum each year, it's, I think, somewhere like $500 a month you'd have to stash aside. So whatever that is, right? Just kind of set it up, automate it, let it ride. And then we talked about it before too, like, are you contributing enough to get that match? And then being mindful of like retirement contribution deadlines. So there's a lot we could do, but I think just setting yourself up for success. So those ongoing contributions and then contribution deadlines.
So it's your Roth that you could put, I know it's changing every year, but like 7,500 in a year, right?
Yeah. And it's your Roth and your traditional. So it's kind of like either or, you pick one. So that's the IRA contribution limit across the board. And then you could put 7,500 in it as an individual to either or, right? Traditional or Roth. And then there's the catch-up contribution, but 1,000 for ages like 50 up.
7,500 for me, and then what my company matches is just an addition, or is it both of us together?
So the traditional IRA and Roth IRA contribution is separate from like your 401k contribution limits. So 401k contribution limits are, I don't know off the top of my head.
Aren't they like much higher though?
They're a lot higher, like at least double, like 20,000, 20,005, and then their catch-up contribution's a lot higher. So this is where, like, especially for my small business owners who, maybe make a significant amount, but a traditional IRA, the limit's just too low. Like, that's where we want to start exploring a SEP IRA or a solo 401k just so we can get those higher contribution limits, because it is significant when you can get into a solo 401k. Yeah, that's a good question, Maggie.
Yeah, there's just a lot of moving parts. I mean, there's so many like different accounts and like different limits, and they change every year. And so it's always like you really got to get it straight if you're doing pre-tax, post-tax. I mean, I could use a little table, a little chart.
There's a lot of charts out there.
I'm sure I could just Google it.
I always like to be organized and make sure I have all my tax documents ready to go for my tax person. I guess for the most part, to be organized, you just have to know what accounts you have so you know what to expect that's coming to you in mail or email in terms of the different documents that you need to use to prepare for your taxes or send in with your taxes or something like that, right? There's really nothing else you can do beforehand except know what to expect and make sure you have a list of the accounts that you have and know what should be forthcoming, right?
Absolutely. And I love that you start that early. I appreciate that. So using previous year's tax return is always helpful. Like, look and see, like, what did you have last year? That's kind of a good starting point. We personally provide like tax organizers for our clients. So it's probing questions like, okay, what were your sources of income? If you have a W-2, go find it. If you have bank interest, look for a 1099 INT, go grab that. Investments, like, look for that. So yeah, the sooner you can start, the better it is. I mean, it's funny because like it technically starts, like e-filing starts at end of January typically, and we go until April 15th, and everyone's different, whether you're like, hey, let's just get it done right away and be done with it, or it's like, let's wait until that deadline.
Mm-hmm. I'm like waiting at the door for my tax documents from the mail so I can get it in.
And is it still kind of like the rule of thumb to hold on to all that information for like 7 years?
Yeah. So technically the IRS can come after you like without a statute of limitations if you have a fraudulent tax return. But chances, like if you're doing things right, I like to say like 7 years is a good rule of thumb. Yeah. You don't need to hold on to a tax return for 25 years. I give you permission to throw it away.
I know some of our listeners need to hear that, where I'm just like, I don't even know if I could find mine from 4 years ago. So God bless.
Yeah. I think I have a digital copy somewhere.
We'd cross that bridge when we get there.
I know exactly where mine are.
Of course you do.
Oh, I love it. Of course you do.
No, but this has been good. I think it's a lot of good tips to kind of end up the year, to max out those retirement savings, and to help women be financially fearless. And so, Carolyn, since you're on the podcast, you get the question everybody gets. What is your definition of financial freedom?
Financial freedom to me and financial fearlessness is that freedom to have choices and to make decisions with confidence, with control, with empowerment, right? And like that to me is financial freedom. And also aligning that with like your core values so you can live the life that is the most meaningful to you. Like it's not about a specific number of wealth. It's more about the meaning of like not the meaning of life, but the life that is the most meaningful to you, right? And that's different for everybody.
I love it.
Yeah.
Well, thank you for coming on and sharing your expertise. For those who don't know, Carolyn's also one of our Purse Strings approved professionals. So we're so excited to have her in our network. And I encourage you to reach out to her if you need any help, financial planning or tax planning or both, because clearly she knows what she's doing.
Oh, I'm honored. Thank you. I appreciate you having me.
Of course. And so until then, get tax planning and be financially fearless.
You've been listening to Women in Money, the shit we don't talk about. Now it's time to take what you've learned and make bold moves towards financial independence. Stay in the know by joining our newsletter for exclusive tools, resources, and updates that keep you financially fearless. Head to pursestrings.co and sign up today. Need a financial professional who gets it? Turn to Purse Strings' curated directory, your go-to resource for financial experts who know how to put you first. Love this episode? Leave us a review and help us empower even more women to own their financial power. Until next time, be financially fearless.